All right, glad to have you back. Our third conversation for today. African leaders may have quickened to congratulate Donald Trump on his election, professing a desire for mutually beneficial partnership. But there are mega expectations that his presidency will change things for the continent of over 1.4 billion people in the wake of Trump's win. Kenya's William Ruto said his country stands ready to deepen ties with Washington. Nigeria's President Bola Tinubu spoke on the second Trump administration, ushering in an era of earnest, beneficial, and reciprocal cooperation. A little step backwards, the Biden administration announced last December that it had invested at least $22 billion in Africa and promised to do more. Trump, during his first term, continuously sought to slash foreign affairs funding, sometimes as much as 30%. Analysts are concerned about whether key U.S. projects in health, security, and development would be implemented under Trump's, especially at this time of worsening hunger and resurgent threats to democracy in Africa. James Ola-Adisa is an industry sector analyst. He's with Chapel Hill Denham. Thank you so much. It's good to have you on the program.
Thank you for having me, Mr. Tolu.
Yes, I think it's good to start on this way. That fear of having Trump back. Some believe that there might just be some moves that might affect tariffs, might be restriction on trade, might affect taxes and all of that. And this might reshape the entire market. Now, not even locally, globally. What's your overview first of a second Trump presidency? That's a second term in office.
Okay, so I think that the new administration is actually critical for Nigeria and Africa at large. And I say that because if we take a look at Nigeria's numbers, just dissecting the foreign portfolio investment numbers, we see that there's a 0.98 correlation coefficient between the foreign portfolio inflows from the US and foreign portfolio inflows, in gross terms. And this is, very, very important for us to pay attention to because it has, a wide range of impact on our foreign exchange markets and the broader economy at large. And I say this because two factors come to mind when we think of an overview of how this administration will have an impact on the currency. The first being crude oil prices and the second being interest rates. So on crude oil prices, I think the policy that the new administration has adopted or plans to adopt is to focus or prioritize local energy production. And that means ramping up crude oil production. Currently, they're the largest producers with about 13.3 million barrels per day, right? And they intend to, pull down crude oil prices in order to ensure that, gasoline prices in the US are cheaper, and that's favorable for inflation. As we all know, Trump has made it very, very clear that it's an America First administration. And what that would mean, for Nigeria, for instance, is that in terms of fiscal revenue, we depend largely on crude oil exports for, FX earnings. And if we see a moderation in crude oil prices, we already see that our crude oil production has been relatively subdued. It would mean that we would see a reduction in FX earnings from crude oil exports. So let's say, for instance, that we have a $5 drop in crude oil prices. Currently, Bonny Light's around $73. WTI is around $71. If we see a 5% drop, a $5 drop per barrel, it would mean that at 1.4 million barrels per day, we'll be losing about $7 million, on a daily basis, which is money that could make an impact in our foreign exchange market. The second is interest rates. The Trump administration favors lower interest rates, right? And the expectation is that, given the Fed has already begun a rate cutting cycle, we could see potentially lower interest rates. And this is important because it brings to mind the carry trade opportunity. So in an environment like Nigeria, we have high interest rates, and global investors are looking at regions with lower interest rates to borrow money and high interest rates environments to invest that money. So they earn a spread on that, which is the carry trade opportunity. Now, if the expectation is that yields in the fixed income markets in the US will drop further, that carry trade opportunity becomes much more appealing. But if we expect to see a slow fall in yields in the fixed income market in the US, they begin to look at other opportunities to earn higher yields. And some of the policies that the new administration plans to embark on. Some of them might have inflationary pressures, might have the impact of inflationary pressures. And I say this because, for one, when we look at the plans to clamp down on illegal immigrants, it would mean that cheap labor, which they typically provide, would now become much more expensive. And so we would then see inflationary pressures stem from that. Secondly, higher tariffs would mean higher prices of goods, of certain goods that are imported into the US, and that would also translate to inflationary pressures. The third point is the fact that he intends to cut corporate taxes, which would mean that the government will rely much more on debt, and that would translate to higher yields. All these three, don't really translate to stronger or a moderation in yields, and that would mean that the carry trade opportunity would not be as appealing, right? So investors might not be particular about that carry trade opportunity. We would expect to see some inflows as a result of the lower interest rates. But the reality is that for us to see the kind of volumes that will make a significant impact in our FX market, we should see yields in the US at around sub 2%. And that will make the carry trade opportunity very, very attractive, considering the fact that our exchange rate is quite volatile. So that's the way I view this new administration and the impact it would have on the country.
Very beautiful summary there, I must say. But let's look at what's happened recently. We see Bitcoin hitting record highs. We see markets reacting, showing that something is happening on the side, the protectionist economy and all of that. How does that also come to you? And do you see this being sustained moving forward?
Like I mentioned, some of the policies that they've mentioned are very supportive of risk assets, equities, right? Which is positive for those markets.
Okay.
Bitcoin is largely driven by sentiments, in my view, right? And what are the sentiments? What is driving that positive sentiment in the market? The reality is that Trump at some point mentioned that Bitcoin is a scam. And now we've seen him take a U-turn and say, he's pro-cryptocurrency. And so the expectation is that there would be some policies that could potentially impact the environment or the market in this case, meaning that we would see much more adoption of Bitcoin. And for investors who have gotten early, they could create a fortune from just holding Bitcoin because it's been widely adopted across the globe. So these are some of the reasons that are fueling the positive sentiment in risk asset like Bitcoin. But the reality is that fundamentals for cryptocurrency, some of them like Bitcoin is not backed by fundamental assets or real assets, and so we might see this being short-lived.
For Nigeria, let's wrap up on that note. For Nigeria, where do you think we would stand? Talking about our relationship already with the US. It's been crude oil sales and a little bit of more exports. Do we have any specifics where we can tap? I spoke earlier to my guest and talked about some of the business opportunities we've had before now. AGUA was there. AFCFTA now is for the African continent. Have we really been able to harness all of this? What's in this for us, Africa's most populous nation?
So I think my view is a bit interesting because I am of the opinion that, while Trump is focused on his country, an America First administration, I think we should also adopt the same method. We need to look inwards. We have a lot of raw materials that we can leverage to be able to produce and add much more value to the global landscape. If you look at our crude oil production, we do about 1.4 million barrels per day. We're not really a large country in terms of trade, right? And so we need to be able to harness much more of our local raw materials. We need to be able to add value to that in order to have much more standing in the international markets. And so I think that this new administration, given that they focus on their issues, some of the problems that the US has faced over time, it would translate to maybe a shortfall in terms of support and aid to Nigeria. and other African countries. And that would mean that we would actually need to sit down, reflect, and think about solutions to some of our problems as opposed to looking elsewhere for the solutions to them.
Mr. James Ola-Adisa, thank you so much for helping us wrapping up the show today, and thanks for your insight into this topic. Your summary and breakdown gave so much clarity, I must say. Industry sector analyst Chapel Hill Denham, do have a productive day.
Thank you for having me.